Hello, everybody. It's Friday, the 5th of December, 2025. 3 weeks ago, did a show with a very distinguished venture capitalist, Aman Verjee, on what Yogi Berra can teach Silicon Valley. Aman is a general partner in a venture firm, Practical VC, and his partner there is another well-known figure in Silicon Valley, another member of the PayPal mafia with a very storied history, Dave McClure. And I thought we would reassemble the team with Aman and bring in Dave. So the three of us are here. Dave, thank you so much for coming on the show. Is AI now an obsession in Silicon Valley? When Aman and I talked a couple of weeks ago, we talked endlessly about AI. Is it getting a bit boring?
It's not getting a bit boring, but it is getting a bit repetitive. Everything people talk about all day long is AI, AI, AI. Maybe there's a few other things in defense tech and crypto that make it through the airwaves, but I would say 80% of the conversation is about AI.
Yesterday,
not without good reason either, but still, it's probably a little too overfocused.
Well, let me ask you another question. And yesterday I did a show with a fellow Silicon Valley VC, Lu Zhang, an immigrant from Mongolia, and we talked about whether the Silicon Valley dream was still alive, leaving aside AI. Is it still there, Dave? You're talking to me from Sunnyvale, the heart of Silicon Valley.
For sure. I would say it's very much alive. Probably right now, the heart of Silicon Valley has migrated north to San Francisco, probably Alamo Square in particular, and downtown San Francisco where all the AI companies are. But still, more people than ever, I think, are excited about what Silicon Valley has to offer. And that's usually nerds and money. And I don't think that's really slowed down at all. Maybe 5 years ago, people thought that was slowing down, but certainly with the launch of ChatGPT 3 years ago, that's re-accelerated.
I introduced you, Dave, as a legend. You probably wouldn't agree, but how would you very briefly
I'm a legend in my own mind.
Yeah, a legend
sure.
in your own mind. We all are. But how would you briefly summarize yourself and your career in tech?
Oh gosh, I was a nerd software developer who came here about 35 years ago. I've been a software developer, been an entrepreneur, been a marketer. Got to work at PayPal with Aman and a bunch of other really smart folks, and then started doing angel investing. Started doing VC investing at Founders Fund with Peter and Sean and a few other folks. And then I started a firm called 500 Startups about 15 years ago. And like the name suggests, we did a lot of early stage investing. And then Aman and I started Practical Venture Capital, and joke there, asterisk Practical Venture Capital, because it isn't. We started about 5 years ago investing in secondaries.
And why'd you get out of 500 Startups?
Well, I did a lot of early stage investing. Probably at some point during that path, I started helping other people get into venture capital. So we started about 10, 20 other smaller VC firms that were originally in 500. Several of them have gone off to launch their own VC firms. And as our portfolio started to get to be 8 to 10 years old, we started worrying about how do we get liquidity on some of our investments. Secondaries have become a lot more important part of the conversation for exits now, probably equal to M&A and IPOs. And we saw a pretty big opportunity investing in later stage companies, or at least buying pieces of later stage companies and funds that were invested in those companies.
What does secondary mean, Dave?
It's kind of like used cars for startups and funds. We buy used cars in good condition, I guess I would say. But primarily it's about buying positions from existing shareholders, and whether those are founders and early employees at companies or early investors in those companies. These are folks who've held those shares for maybe, let's say between 5 to 10 years or longer. And hopefully those shares have appreciated and they're looking for liquidity, but the companies have not exited yet. They haven't gone public or they haven't been acquired.
I'm going to come to you, Aman, in a second. You're nodding, but I do want to ask Dave one more question. If I came knocking on your door, Dave, trying to sell some shares, I'm sure this has actually happened, and you said, well, I might be interested. What company do you work for? And I said, OpenAI. Would you shut the door in my face?
Well, I wouldn't, but there is a very strong market for for sellers of OpenAI shares. So those folks don't have any problem finding buyers, probably at a premium to whatever the price in the most recent round has been, and possibly they're being sold in multiple layers of vehicles. And when you tell me that you actually are selling OpenAI, I probably say, okay, how many layers deep in SPVs are you that I'm buying from? And so, great company, but probably being sold at a premium and multiple layers of fees and carry that might not be super efficient for the buyer.
Aman, you and I talked in mid-November. Back then, if I'd have asked you the question, you might have said, oh, I'd be very interested. Over the last 2 or 3 weeks, OpenAI seems to have descended. It's become a 3 weeks out of hell for Sam Altman and his team. Is that fair? What's happened over the last 3 weeks that seems to have changed the entire, and I don't want to only talk about AI, but it's a very interesting story of how the landscape has so dramatically changed, shifting from OpenAI to Google in particular.
Yeah, I was going to answer. I think the new Gemini model was just eye-opening and impressive, and it had I wouldn't say it leapfrogged OpenAI, but the multimodality of that LLM, by which I mean the use of text and then audio and images in order to reason, was impressive. And this was for a company that we covered it on our pod, Dave and I, and we joked about it that Google should be telling us now, don't call it a comeback. People had written them off. But LL Cool J was listening in my ear saying, hey, I've been around for a few years. This is the leading company in terms of technology, probably of our lifetime. They had the capabilities, and they were on their back foot probably until a few weeks ago. And Gemini, the new model of Gemini, I think has changed the conversation and is very impressive. So they're in the conversation, but OpenAI is certainly not going anywhere. I think both are great companies. There will be multiple winners as we talked about, and just the way these hype cycles work, it's always one's ahead, and the next one leapfrogs ahead. Then Anthropic will come in with something that everyone's talking about, and we try to stick to the longer term picture and figure out if there are going to be multiple winners. What are the winners going to be? We want to try to get into the right price and not get too carried away with this week's news.
Yeah, it's rather like wacky races. Every 10 minutes there's a new leader.
Sure.
But are there long-term trends here when it comes to OpenAI, particularly in terms of not just Google gaining ground, but all the talk of Anthropic doing an IPO next week? Do you think of Anthropic in the same context as OpenAI, or are they quite different companies now?
I think OpenAI is what I've seen in my lifetime is on the consumer side, there's usually one or maybe a couple of winners, and it's a winner take most. And I think OpenAI is going to be really hard to catch on the consumer side. They've got 850 million users and counting. Engagement, the quality of the results and the work, it's going to be hard to displace them from the number one spot. They're up to 20 million in ARR, annual recurring revenue at the end of the year. That's what Sam Altman says. They're probably at 20
billion.
Sorry, did I say million?
Billion.
When you say,
wow.
Aman, when you say that's what Sam Altman says, do you believe everything that Sam says?
No, I don't believe everything he says, but there's enough information and investors and data points based on their users, their monetization, what you can infer from ARPU, that I'm convinced they can get to 50 billion at some point at the end of next year. So I think that is a great company. Anthropic they don't have so many users. Claude is a bit more enterprise focused than where OpenAI has staked out their area of expertise. Claude is very impressive, and I think there will be lots of winners on the enterprise side. That's the other lesson of technologies. On the enterprise side, you get lots of winners. And so I don't quite think Anthropic is at the level of OpenAI, but they're in the conversation of top 3 to 5 players, probably tracking at 7 to 10 billion in ARR, and but also growing at rates that I've just never seen this in the Valley. OpenAI and Anthropic are, I think, the two fastest growing companies. I was going to say startups, but they're not startups anymore. They're probably the two fastest growing companies of all time. And so that says something.
Dave, you smiled wryly when I asked Aman whether he believed everything Sam Altman says. What do you make of Sam? Is he unusual? You were around in the PayPal days. You've worked closely with Thiel and Musk and all the other PayPal mafia. Is there something different about Altman, or is he just another version of a fast-talking Silicon Valley entrepreneur?
I think Sam is probably one of the most competitive, smartest, and thoughtful entrepreneurs in the Valley. And I was running 500 startups when he had taken over from Paul Graham and running YC. And he's not somebody I would particularly want to be across the table playing poker with. I think he's a formidable competitor. He's a really smart guy. And again, I would probably suggest I don't always take everything he says at face value, because there's probably like 3 layers of chess going on in his head. But I also think he's, a tremendous entrepreneur, and he thinks, many, many, many moves ahead. Certainly OpenAI is facing some challenges in a couple of different areas. They're probably facing renewed challenge from Google. They're facing challenges from open source models in China, maybe at much lower costs. They might be facing limitations on their ability to pay for their expansion, and certainly there's limitations on the power available for their, build out and expansion. But still, Aman is correct. They have a fairly large number of consumer users. Although you might say switching costs are probably easy for those consumers, I still feel like they are, one of the biggest juggernauts in the industry right now. And if,
what do you make, Dave, of all the controversy about this division of the company into a for-profit and non-profit? Is it just corporate theater? Is there something behind it? Is it a weakness potentially in AI as a corporation as it moves forward, a for-profit corporation?
I doubt that it's really got a lot of problems in the long term. I mean, the company is doing so well right now. I'm pretty sure that plenty of people will move mountains to make sure that success continues. Probably Elon is interested in raising some concerns and issues about the nonprofit structure, but I just don't see that really being that big a deal anymore. Particularly with the recent agreement with Microsoft and the restructuring, I don't think it's likely to be a problem. Sam's issues are much more about limitations on power generation and being able to come up with enough money to keep his expansion going. Those are probably much more the things he's worried about.
But there seems to be, at least publicly, a great deal of ill will between Musk and Altman. And Musk, they were co-founders of OpenAI. Now, I think yesterday or the day before, Altman announced that he was going to potentially launch a rival to SpaceX, and Musk seems intent on destroying OpenAI. In your experience, you've been around the Valley for many years, Dave. Do these personal animosities count, or is it just theater? Is it Trumpian in the sense that yesterday's enemy becomes today's friend?
Well, it's interesting because, I think if you look at the history of Elon and some of his days of PayPal, he was somewhat pushed out of PayPal in the past.
You mean he was fired? He was.
I won't get into all the details of what happened. I wasn't there, but let's just say he went on vacation as CEO and came back and wasn't. But he was still the largest shareholder of the company when it went public. Somehow he and Peter made amends, and Founders Fund became one of the largest and earliest investors in SpaceX. So I think successful companies and growth of revenue heals all wounds. And I don't think it's so much personal animosity between Sam and Elon, although that's probably true. It's just that they're both tremendous competitors. They both want to be number one, and they're in probably the highest profile startup competition of all time. I can't think of anything, at this level. Maybe Bill Gates and Steve Jobs back in the birth of the personal computers is equivalent, but probably nothing since then that we've seen like this.
What do you make, Aman, of these larger-than-life personalities in Silicon Valley? Do you think that Elon and Sam, do they take their own brand seriously, or is it just a game for them?
I think it is. No, I think they take it very seriously. I think what Dave is talking about with Sam Altman, I don't know Sam very well. I've worked with Elon, with Peter Thiel. A lot of folks said that in PayPal. A lot of very successful founders. They're very serious. They're very competitive. There's an element of like it's never good enough. It's a chip on the shoulder or something about them that just does not let them stop at. What's SpaceX's valuation? 350, 400 billion based on the recent round. Then OpenAI goes to 500 billion, and I'm sure somewhere in Elon's head is like, damn, 400 is not 500. So now Sam is number one, and I'm number two. And of course, you can feel good about creating a $400 billion company, but there's a quote from Ricky Bobby, right? If you're not winning, you're losing. So I think it's a little bit about Ricky Bobby.
Talladega Nights, baby. Talladega Nights.
Yeah.
I'm sure Yogi Berra said something about this too.
I'm sure he did. He said something great about almost everything. There's another quote from
predictions are hard, especially about the future. That's one of your favorite quotes, isn't it?
It's hard to predict.
That's on our website. Absolutely.
Yeah.
Dave, Musk is in the news, always obviously in the news, but he's particularly in the news in the last couple of weeks because of this supposed $1 trillion deal that he's done with Tesla. Does it concern you? The Time ran a piece a few days ago about what the coming rise of trillionaires could mean for democracy and the rule of law. Are you concerned that Elon Musk in the next few years might be worth $1 trillion, could have more money than most governments in the world?
I guess if you're asking me a question about do I have concerns about money in politics, the answer is yes. Is that a new concern? No, I think that's probably been a concern for the last several decades, if not hundreds of years. I do think that those folks are more in the press than ever. And, certainly with Elon getting involved with the Trump administration and Doge, that was a very high profile story, at least, for a period of time. So, money in politics is not a new story. Maybe billionaires have a higher profile, risk factor than before. I think the issue is more with tech billionaires potentially being involved in politics. And I don't know why tech billionaires are, more of a target than the past than just normal billionaires. If you go back, I guess, JP Morgan and lots of other robber barons made money and were very involved in politics. Aman probably has a lot of history on this that he can talk to you about from his book about bubbles. So I'm not not concerned, but it's not a new concern.
The New York Times recently, again last week, I think they ran what many people see as a hit piece. Some people like the piece on David Sacks's involvement, not just in Silicon Valley, but in politics. He's Donald Trump's AI man. Sacks as well. What did you think of this piece?
Well, I used to work for Sacks. That was the first person I worked for at PayPal. And Sacks is a tremendous entrepreneur and a tremendous investor. I guess full disclosure, Aman and I were LPs in Craft Ventures as well. My personal politics aside, which I vastly differ than Mr. Sacks on many political issues and certainly on his positions on Ukraine. But I do think that New York Times piece was over the top. David certainly did divest himself of a number of, investments before he took the job with the administration. As much as I have lots of criticism of the current Trump administration, I actually think Sacks is doing a pretty good job on regulatory policy for AI and crypto that's positive, not just for Silicon Valley, but for the country. And, I'm sure his investments, whether he's divested of them or not, would benefit from positive policies there. But that's because I think those policies are helpful. So it would be hard to imagine an environment where if he's successful with his efforts in regulatory policy, that they don't benefit, his general investments one way or another. So I do think that recent piece by the New York Times is probably a little bit misplaced. Even people who aren't always, fans of Sacks politics would say, generally, I think he's been doing a pretty good job on AI and regulatory policy and AI and crypto.
Aman, what did you think of the piece? Were you as annoyed, irritated by others about the way in which they seem to go after him, and the headline about in the Times, Silicon Valley's man in the White House is benefiting himself and his friends, wasn't really reflected in the article itself?
Yeah, I don't get too annoyed by what the New York Times says about folks. I've got political persuasions more closer to where David is, and I don't look to the New York Times or the Washington Post or others to be fair and balanced about it. I would say about Sacks, as David McClure pointed out, he He was a very successful investor. He had made a lot of money in SaaS companies at Craft Ventures. He was pretty involved in crypto. And before he went to the White House, and I know this from my personal relationship with him, he divested the entire portfolio, and that would have cost him. I won't give you the exact number, but it's on the order of tens of millions of dollars if he had held on to those assets. And he did that because he wanted to avoid conflicts. And that didn't come up in the article. I gave it a quick skim and gave it a quick read, but it didn't feel like it was a very fair and balanced report. And I think that unfortunately that's not great journalism on their part.
I would even go so far as to say Sachs is the exception in the Trump administration rather than the rule. I have extremely large criticisms of the rest of the Trump administration, numerous people benefiting from not divesting themselves from things, actively participating in investments that clearly, on any read of the emoluments clause and other like legal affairs, they're illegal, like very obviously illegal. And yet, plenty of people in the Trump administration are doing lots and lots of things that they are personally benefiting from. Crypto being one of them.
Yeah, I wanted to talk to you. It's classic New York Times to have run the wrong piece about the wrong man at the wrong time.
It's like right concept, wrong person.
Yeah, and they don't seem to be. Speaking of accountability, I'm not quite sure how accountable they are, but that's another show, another conversation. What about crypto, Dave? I've always been deeply suspicious of it. Always seen it as essentially a Ponzi scheme. Is that oversimplistic? Is that unfair?
Yes, it is overly simplistic. It's a very complex Ponzi scheme.
Okay, well,
I don't think it's a Ponzi scheme at this point. I would say, unless you think gold is a Ponzi scheme, it's a store of value that people seem to believe in, and there's plenty of things that are based on trust and belief that are monetary, and it's become an established part of what people think is a store of value, and they're allocating at least single-digit percentages of their net worth into the various asset classes. At the very least, Bitcoin and Ethereum, and now probably Solana and a few others. I think there's a strong use case for having digital assets and trusted digital assets, and I won't get into all the depths of blockchain and why that makes sense, but the real issue is kind of like, what's the fundamental asset that's backing up these items? And I guess you could say there isn't anything fundamental that's really backing up the items, but ever since the US went off the gold standard in the 70s, you could argue the US dollar also has the same set of issues where, what's the asset fundamentally backing up any global currency these days?
Is it a cause or a consequence of America's increasingly difficult role, shall we say, or ambivalent role in as the leader of the so-called free world and the dollar's role in this? Is it potentially a replacement for the dollar, Dave?
I think in the long run, for sure, but it's not so much a replacement for the dollar. It's a replacement for any, central bank currency in the world that potentially runs the risk of having that currency be spent too frequently or printed too frequently. And I think that's been a lot of the criticism of, governments setting interest rates and governments, creating currency, is there's a tendency for governments to overprint and not manage their budgets. And, theoretically, those currencies are going to be devalued in the future. And I think we've even seen that today with the US dollar being somewhat devalued over the last 12 months. So there is a strong, reasonable case for, crypto being a currency that's not governed by a central bank and perhaps not as corruptly governed by countries and politics. Whether that's true or not, I don't know, but that's a reasonable thesis.
Aman, you're more sympathetic to the Trump administration, I think, than Dave, although you're not hardcore MAGA. Again, maybe I'm being unfair.
It's fair.
Are you concerned with crypto and the Trump family and the boys and Trump's own crypto initiatives, his wife. It seems to be becoming a family business. David Sachs might not be guilty of inside trading or of the other things that the New York Times is hinting at.
Yeah.
Is there a bigger story when it comes to the Trump family and crypto?
Yeah, I think it's fair to say any American citizen should be concerned about that stuff. I think the stuff that would concern me if a sitting president of the United States is actively trading, making markets, taking positions, transacting in companies that are then doing business with something like a crypto asset class and benefiting those companies as a result, and then benefiting either himself or his family through that. I do think that is concerning. I think that is there should be a role that Congress has to play in actively policing those types of conflicts. Issuing a meme coin or coming up with a T-shirt sales or something like that, and selling those on the White House lawn. It seems that would be unseemly to me for a president to be behaving that way. That's also a criticism I have of the president in general, although I agree with a lot of his policies. I think just that's bad behavior and a bad look. I don't think it trips into some of the the illegality, but certainly I do have a concern, and I think we should all be concerned about conflicted transactions and what that does to the family. So I would prefer that the current administration behave differently on that score, and perhaps the last administration as well. But this one does seem to be one-upping even the last administration in terms of these types of conflicts.
Here we go with the both sides arguments again from my part.
I try to call it evenly. I call both sides when I see a violation.
Hold on, Aman. Are you suggesting that Biden had his finger in the crypto pie, if there's such a thing as a crypto pie, a digital crypto pie, as flagrantly as Trump and his family? I mean, Hunter Biden did a lot of stuff, but I don't think he was in crypto, was he?
No, but I think it was Hunter Biden would have been when you have the first son on a board of a Ukrainian company getting paid.
Hunter Biden was not in elected office.
Right. So, Dave, what's your take on Trump and crypto? Or the Trump family and crypto?
Long conversation.
You're against
I think I will just leave it as where there's enough smoke, there's probably a fire, and right now there's like a room full of fucking smoke.
More than a room, I think, Dave.
The entire West Wing, yes, I think.
I think all of Washington, D.C., most of the East Coast is shrouded in the smoke of Trump crypto. I mean, is it conceivable this thing's going to blow up? Or we got another, I can't remember who wrote it, but it was someone wrote recently that, the Harding teapot scandal would be minor when this whole crypto thing is finally known. I mean, everyone's obsessed with Epstein these days, which to me is, again, a distraction. The crypto story is the big one, Dave, isn't it?
Again, I hesitate to dive into this because all of it is unseemly.
Well, I like unseemly. That's why I've had you on the show, Dave, because you're an unseemly character.
Much of it is illegal. Whether that's been proven or not, I think is maybe a decision for the courts or perhaps Congress, which I think is really the problem here. Is that there's clearly actions by Trump and his administration which have been illegal, and there's plenty of evidence, but our current Congress has chosen not to indict him on those subjects, or at least not to take that up. So I don't know. If someone like the man says, he could shoot somebody in broad daylight on Fifth Avenue and get away with it, well, he has multiple times.
I'm curious. You guys, you've worked for many years together. You're now both the partners. You're married a practical VC, but your politics are so different. How do you actually get on? Or maybe you don't get on?
I think our politics have always been different and have been that way for 20 to 25 years. We've been arguing about politics and sports and finance for many years. But somehow we do seem to see eye to eye on deals and business and finance. So I think we have our varying opinions on politics and how we govern our societies, but we seem to see eye to eye more on deals and valuations and investments.
Yeah, and there are areas where we agree, and I think it's good to have a conversation, like a good marriage, right? Sometimes it's good to have a conversation, even if a tough conversation, but don't make it personal. We had it at PayPal. We had Peter Thiel and Keith Raboy, who you might know. We had Reid Hoffman, who is now, I believe, one of the big funders of the Democratic Party. And it was always about ideas and not about the personalities. And there were also issues where we agree, even within the realm of politics. We agree on tariffs and taxes and, crypto policy, and then we can just disagree on other things. But try not to let that spoil the good marriage.
You agree, Dave? Good marriage?
I generally agree. I would say that we probably disagree on tariffs. We agree that tariffs are not a good idea, right. I think is probably the case. Whether other parts of the administration policy we agree on, maybe not quite so much. But I do think there's several fundamental, principles of the Republican Party that I do agree with, even though I lean a little bit more left. I just think the Trump administration doesn't really represent the Republican Party that much anymore.
Finally, we're getting close to the end of the year. We know that 2025 has been the year of AI. What about 2026? As we look forward, the two of you, you're both prescient, you're investors, you've been around tech for a long time. I mean, obviously 2026 is going to be another year in which everyone talks endlessly about AI. But do you have other predictions of what might happen or might not happen in 2026 and what you would like to see happen?
Well, I think the big change that possibly is going to start happening is more verticalized AI and real measurable productivity gains in different industries that haven't necessarily been tech focused. Right now, most of the AI conversation has been around, the big LLM companies, around NVIDIA, around the hyperscalers like Amazon and Google and Microsoft and Meta spending money building up data centers. But I think the other shoe to drop that hasn't quite dropped yet is around real, revenue, productivity increases, expense reductions in industry verticals. And does AI really make a difference in non-tech companies, or do those non-tech companies get displaced by AI versions of those companies that are vertically focused? So that, I think, is really the big, news that hasn't quite happened, and I do expect that to happen in the next, let's say, 1 to 3 years. I don't know if it'll be in 2026, but over the next few years, either we are going to see productivity gains as a result of AI by non-tech companies, or those non-tech companies are going to be displaced by the tech equivalents of them. And that's been happening, over the last 20 years in many categories, but I think that'll be accelerated by AI.
Aman?
Yeah, I think it'll be the fourth year in a row next year that we talk about AI and AI native development platforms and supercomputing platforms. I think all that is real. The amount of investment going into that is on the order of hundreds of billions a year now. When you and I talked last time, we talked about the capex boom and the required returns, and we're approaching a couple to 3% of GDP now going into AI capex, which is kind of what we put into the last 1998, 1999 telecom boom. Like these are numbers where these ROI numbers have to make sense. But I think the new ones that'll begin to hit radars. So the AI infrastructure layer is being built out, but the AI application layer is coming. These are like domain specific, DSLMs or LLMs for specific verticals, like Dave says. I think the other one that's going to hit next year. So there was a moment probably around 2022, I guess, when OpenAI launched, that all of a sudden LLMs were passing the Turing tests, and people realized, wow, the manipulation of language now is real, like catalyzed the imagination and the investment cycle. We're not quite there with robotics, but I think we're coming. There will be a moment where robots that can actually do things and build things and work on assembly lines and create things will capture the imagination. Whether we're a year away, whether that happens in 26, Elon thinks we will. Maybe it's a couple of years out, but I think there'll be the same motivation around physical AI and how AI integrates with the robotics that will create another investment boom. Even today in the Valley, there's still a saying that hardware is hard, or hard things are hard. I was the CFO of a hardware business, so I know how difficult that is to build things that actually work in the world of atoms and the cash conversion cycle and all this stuff. A lot of VCs still fear to tread in this area, but I think that'll be a big boom happening in the next couple of years.
And let's end on a personal note. Dave, for both of you, has 2025 been a good year for you personally? And what do you want to do outside making more and more money? I'm not sure you really need any more money in 2026.
2025 is a pretty good year. I'm hoping that in 2026 we'll see a Canva IPO, which would probably be great for us, both professionally and for me personally. I was an investor in the company 12, 13 years ago, and they've done extremely well.
That will allow you to buy a new pair of headphones, will it?
I hope so. I do think that one thing about the Valley is probably we could be doing more on philanthropic and impact areas, and generally speaking, I think we've done well in the past when people have made money here in the Valley. They have put some of that money back to work in philanthropic areas. I hope there's more of an awareness as AI comes to potentially displace and take jobs away and make society more productive, more profitable, that we also think about how do we bring the rest of society along with us.
Yeah, and we got a show next week with Josh Levine from a fellow VC of yours from Boulder, so who's very much focused on that. What about personally though? You dodged that question, Dave. What haven't you done in your life or in 2025 that you personally, outside business, want to do in 2026?
Well, one thing that was great for me personally was I had my knees replaced last year. That was actually in 24. So I was in rehab for most of the end of 24 and early 25. But that's just been fantastic. I'm back to running around and working out and playing Frisbee, and it's just been a whole new lease on life for me. I've personally been involved in a lot of health and longevity issues. I think that's become a really huge business. We're seeing very large, companies, Function Health and Superpower and a bunch of others. So I think that's something that I do hope, all these tech and productivity gains actually come back to us personally and selfishly. I'm approaching 60 here, and I sort of want to act like I'm still in my 40s when I'm in my 60s, but that takes a lot of effort and work. So we'll see how 26 plays out, but I'm going to try and be a very active and spry 60-year-old next summer.
We'll try and get you back on the show next year. Let's end with you, Aman. I know you're a very keen parent. That takes up most of your time away from the office, doesn't it? What kind of year has 2025 been?
It was terrific. I was gonna say, I think that that health and fitness journey that Dave was describing, it's been amazing. I've watched him get a new excitement about life and running around on two good knees, and he's been inspiring. And my kids are 11 and 15, and I try to encourage them to get out and running around as well. They're both doing great in school. They're both doing wonderfully. One thing I've really enjoyed doing is just volunteering with their
everyone does well in school, Aman, in Silicon Valley. They all get A's. It's like Stanford, isn't it?
They don't give any they don't even give grades. They give like proficient and then exemplary, and if you don't show up in class and don't do homework, you don't get an F. You get like approaching or no evidence or something. But the kids know. I translate for them what the grades look like, because that's how I keep them motivated. It's keeping them on the right track, and especially with young girls, that feels like job one some days. I'm their soccer coach. I'm the Palo Alto AYSO select team coach. We have a very fun, very competitive team. Up until last year, I didn't do much of that. I was like Dave McClure. I was athletic and running around and competing in Spartan events and Tough Mudder events. All great, but it's very selfish, right? You're competing for your own self sense of glory and confidence and fun. But giving back to the kids and watching their mates running around and enjoying the soccer team and getting your exercise that way was actually very enjoyable. So I want to keep building, their participation in the soccer team and building that role in the community. I think these young girls benefit so much by that sense of teamwork and fair play, and at this age, what it takes to win, and all that I really get a kick out of. So that'll be something I'd like to do more of next year, in addition to just being a good parent, a good venture capitalist. I got my book coming out in January, so I'll be an author again.
This is the boom bust book.
Yeah, A Brief History of Financial Bubbles. And so that'll come out in January, and it just talks about 10 bubbles going back to 1636 and why they happened, causes and consequences. Is AI a bubble? We cover all that.
Yeah, that's what we talked about in the last show. Well, Happy New Year to both of you, Dave. I'd love to get you both back on the show more regularly in the new year, because you both bring an unusual, frank, and very entertaining take on Silicon Valley and tech. So we'll try not to talk too much AI. Happy New Year, and we'll talk in the new year. Thank you so much.
Thank you, Andrew.
Thanks a lot, Andrew.